Hi everybody, welcome back to the Equity Trust Virtual Classroom. I'm John Bowens, Director of Education and Investor Success, and in this segment we're going to show you how you can execute on purchasing tax liens and tax deed certificates through a self-directed IRA, or for some of you, you might have multiple self-directed accounts, maybe even a health savings account and covered education savings account, maybe a solo 401k. And so some folks want to know, how can they partner multiple accounts together in one single entity to go out and acquire tax lien and tax deed certificates, whether that's through an online auction platform or potentially through a live auction platform. So we're going to dive into this and model this out on the whiteboard behind me. I oftentimes get the question, John, why can't I go out and buy tax lien or tax deed certificates directly through my self-directed IRA? Well, it's not that you can't go to an auction and utilize your self-directed IRA and directly acquire tax liens. It's just that in some cases, the banking logistics and mechanics are not compatible with the banking systems and logistics of a self-directed IRA. Keep in mind that most online or live auction platforms, they're not set up to accommodate a self-directed IRA or self-directed solo 401k or other account type to buy tax lien and tax deed certificates. Most of the folks that are buying liens through those auctions are probably not using self-directed IRAs. That's not necessarily a bad thing. It's just the reality that most people are using taxable money and not tax-free money. And that, of course, is because most Americans are not familiar with self-directing an IRA, 401k, or other account, like we talk about, the tax-free accounts, into tax lien and tax deed certificates. The good news is many self-directed investors have developed a system to make it very easy for them to buy tax lien and tax deed certificates at these various auctions throughout the country. So we're going to dive into that in this segment. I'm going to show you the first model, which is, what if you just want to use one single self-directed IRA to buy tax lien and tax deed certificates? And then secondarily, the model of if you wanted to partner multiple self-directed accounts, maybe even multiple accounts for you and your other family members, all in one entity to buy tax lien and tax deed certificates. All right, so let's jump into this. The first thing that I want you to write down as you're taking good notes is LLC, Limited Liability Company. So most investors are going to form a limited liability company, and then their IRA is going to own that LLC, and then that LLC is going to be used to purchase tax lien and tax deed certificates. Of course, you're the one that is making all the decisions, and you're in full control of your IRA. Now, does it absolutely have to be a LLC, limited liability company? Not necessarily. You would want to consult with your attorney on what type of entity would make the most sense for you. In this particular instance, most commonly, I see a LLC structure, so I'm going to use LLC structure. If you decide to use a different structure or entity per your attorney's recommendation, then in that case, you'll want to plug and play that entity with the LLC in this model. Equity trust is a directed custodian. We can't give tax, legal, or financial advice. So I'm showing you this model so that you can then give this to your attorney, and they can help you form the LLC or entity that makes the most sense for you in your self-directed accounts. Now, I oftentimes get the question, how would I identify an attorney? Well, you're forming an entity here, so what you might want to search online in your local market is an entity formation attorney, or maybe you search real estate attorney that will form LLCs and other entities. A lot of real estate attorneys that specialize in real estate law also handle entity formation, like LLC formation, corp formation, S-corps, other types of entities. Okay? So you're just going to want to make sure you do some due diligence and you find an attorney in your marketplace that can help you form this entity. And then Equity Trust, as your custodian, will help facilitate directing the funds per your request from the IRA or IRAs directly to that LLC. In fact, what I encourage you to do is actually take this video and take the pictures that I'm going to diagram here and give these to your attorney that's going to be helping you with this process so that they can help coordinate the efforts going forward. All right, so let's use the example first of, what if you have one single IRA that you want to go out and invest in tax liens? So we're going to call this let's just say it's your Roth IRA. So you open up a Roth IRA. We have a self-directed SD Roth IRA, we're going to call it, all right? Now, you can plug and play Coverdell Education Savings Account. You can plug and play traditional IRA, SEP IRA, simple IRA, health savings account, any of the tax-free accounts, solo 401k. All right, but for the purpose of this, I'm just going to say Roth IRA. Now, let's say you open up a brand new Roth IRA and you make a contribution, and let's say you make a $6,500 contribution. So you got $6,500 in your Roth IRA, and now you want to deploy that capital. You want to make investments in tax lien and tax deed certificates. So of course you're going to prepare for an auction, whether that's online or in person. So well in advance, you're going to want to make sure you have this whole structure set up. So now the next step, we're going to go step 1 is form LLC. Form LLC, limited liability company. Form LLC. Now again, you're going to want to make sure that you talk to an entity formation attorney. So you're going to go and speak to an attorney. They're going to help you form this LLC. The second step of the process, your IRA will fund the LLC. Your IRA is investing in the LLC. So step 2, Roth IRA funds LLC. Step number 3, LLC then purchases tax liens. So when you go to the auction, whether it's live or online, it's the LLC that's acquiring the tax liens or tax deeds, not the IRA. Now the IRA is the owner of the LLC, but it's the LLC that's actually purchasing the tax liens. All right, so to break it down for you, that's the simple 3-step process here. Step 1, form an LLC. Step 2 is the Roth IRA. In this example, will fund the LLC. And then step 3 is the LLC is going to purchase tax liens. All right, so I'll give you a second to make sure you have that written down. The $6,500 is going to be sent to the LLC account. All right, so now that you have that, let's break this down in a little bit more detail for you. Okay? Self-directed Roth IRA. Again, we got $6,500. We want to put this $6,500 into an LLC, and then that LLC is going to go out and acquire tax liens or tax deed certificates. So going back to our second step, forming an LLC. So I'll write step 2 again. You form an LLC. You go to an attorney, again, like we talked about, that can help you form an LLC. They're going to draft what's called an operating agreement. All right, you can write down operating agreement. That operating agreement will include your IRA language. So instead of the LLC owned by you, let's say John Smith, it's going to be owned by John Smith's IRA. So the 100% member of the LLC is going to be Equity Trust Company. So you can write this down. Equity Trust Company. Custodian. Equity Trust Company, custodian, FBO is in for benefit of, and then your name, IRA. So from the top, you form an LLC, your attorney is going to draft an operating agreement. Within that operating agreement, you'll have your IRA listed as the 100% member. Equity Trust Company, custodian, FBO is in for benefit of, your name, IRA. The LLC will be filed with the state. That's part of your attorney's job of forming the LLC, filing with the state, drafting an operating agreement, signed by you as the account owner. So you have the ability and authority to sign all documents on behalf of your IRA. So you're going to sign and execute that operating agreement. Once you have this all arranged, you then, in concert with your attorney, are going to apply for a tax ID number for that LLC. Why do you need a tax ID number? You're going to need a tax ID number so you can go to a bank and form a bank account for the LLC. So this leads us to the next step of the process, which is forming a bank account. So you're going to go and you're going to form an LLC bank account. What bank? Whatever bank account you want to use, whatever bank institution you want to use. So you form an LLC bank account, and then you take the $6,500 from your IRA and you send it to the LLC bank account. So the $6,500 in cash is no longer in your equity trust IRA, it's now in this LLC bank account. And you have the ability to control and invest that money at your discretion. Obviously, you got to make sure that you follow all of the disqualified persons and prohibited transactions rules. Keep in mind that this money is now going to that LLC, and that LLC is making the investment. So you're no longer making the investments directly out of the IRA. The investments are made through this LLC bank account. So now what this allows you to do is if you need to connect your LLC bank account to an online platform, you need to send direct deposits, you need to go to a live auction and have cashier's checks, you're able to access that money directly through this LLC bank account. All right? So how do you get the money from the IRA to the LLC bank account? Well, Equity Trust, per your direction, would send a wire transfer or a check directly to deposit in the bank account. At that time, you would submit a copy of your operating agreement. So you're going to include a copy of your operating agreement. You're going to send that to Equity Trust. One of our associates can help you with this process if necessary. And then you're also going to fill out what's called a direction of investment form. DOI for short, direction of investment form. So just two items that we would need in order for you to process the transaction. A copy of the operating agreement, and then a copy of what's called a direction of investment form. And we can help you through this process. Our associates here can help you through this process. In fact, you can do it all online. So you can go online and initiate a direction of investment and upload a copy of your operating agreement, and then Equity Trust will wire transfer the funds directly to the LLC bank account that you provide. Once you have the money in that LLC bank account, you can then go out and buy tax liens and tax deed certificates directly through the LLC. If you have to, let's say, foreclose, your LLC would be foreclosing. Your LLC that your IRA owns would be paying for those expenses. And then if you sell the property and you make a profit, then all that profit goes back to the LLC. At some point or another in the future, you would begin just distributing money through the LLC to your IRA. So think of the LLC similar to if you used your IRA to invest in a publicly traded stock, right? Cash leaves the account. In exchange for that cash is a stock certificate. It's the same concept here. Money leaves your IRA. In exchange for that is interest, in this case, a 100% interest in an LLC. All right, so that's if you were just using one IRA. And now what if you were going to use multiple IRAs? Well, same format. Really, it's the same system, if you will. Just in this case, instead of just having one IRA as the member, you're going to have multiple IRAs or multiple entities. So let's say, for example, you open up a self-directed Roth for yourself. Maybe you have a Roth for your spouse. I'll call this a spousal Roth. And then let's say you have a child's covered L education savings account. Let's say CISA number 1. Maybe you have another CISA. Let's just say CISA number 2 for another child. And then maybe you have an HSA. Okay, you have an HSA. And let's say, just to use round numbers, let's say you put $2,000 in per entity, per IRA or per investment account. So you got $2,000 in your Roth, $2,000 in your spouse's Roth. You got $2,000 in this CISA account over here. You got another $2,000, and then in your HSA you got $2,000. So in total you got 2, 4, 6, 8, 10. You got $10,000 in capital to go out and deploy into tax lien and tax deed certificate investments. So in this case, we have to make sure, just like you learned about in the training, you have to make sure that everything is done proportionally. So if you're partnering with various family members, you have to make sure that all the income and all the expenses flows proportionally so that you don't trigger a prohibited transaction. So in this case, we have 2,000, 2,000, 2,000, 2,000, 2,000. So that's a 20% interest, right? 20, 40, 60, 80, 100. That's a 20% interest in each entity. So we got 20%, 20%, 20%, 20%, and 20%. So like we talked about before, the next step of the process is to work with your entity formation attorney. So you're going to call up your entity formation attorney and you're going to give them this model and you're going to say, this is what I want to do. Now it doesn't have to be 20-20, 20-20, 20. It might be just 2 IRAs. Maybe it's 50-50. Maybe it's 70-30. Maybe it's 3 accounts. Maybe instead of just having an IRA, maybe you have some non-IRA money. So you are partnering your IRA money with your non-IRA funds. Just remember, when you're partnering with yourself, when you're partnering with disqualified persons, you just have to make sure everything is done proportionally. So in this example, we then go to our LLC formation. So our attorney is going to draft, that is, your attorney is going to draft an entity, an LLC in this example. So we have an LLC that's going to be formed, and we're going to have 5 members using our example. All right, so there's going to be 5 separate members listed. There'll be a section within the LLC operating agreement that lists out each one of these members. Equity Trust Company, Custodian, FBO, Roth IRA, 20%. Equity Trust Company, Custodian, FBO, Roth IRA number 2, 20%. Equity Trust Company, Custodian, FBO, CISA account number 1, 20%, and then the CISA account number 2, and then the HSA. Right? So you follow what I'm showing here is that you're making sure that the operating agreement lists all of those individual members. So we have 5 members. Again, we have the Roth. I'm just going to say Roth number 1. Remember, all of this is going to be titled in the operating agreement with that specific titling that I mentioned. Roth IRA number 1. 20%. We got Roth number 2 at 20%. We got CISA number 1, 20%. We got CISA number 2, 20%. And then we got the HSA, 20%. So you have an operating agreement, Equity Trust Company, Custodian, FBO, your name, IRA, and the percentage, all listed out in the operating agreement. Each of the account owners would sign the operating agreement. Then you would send that operating agreement to Equity Trust, and along with that, a direction of investment form. And then the $2,000 in each one of these accounts is going to be sent directly to the LLC bank account. So same as we showed you before, you form an LLC checking account and all of that money goes to that LLC bank account. And now that one individual bank account with all of the different monies here, all partnered together, is being used to buy tax lien and tax deed certificates. Now this is an example of just 5 accounts. Could there be 10 accounts? Could there be 15 accounts? Could there be 20 accounts? Absolutely. So you have the ability and flexibility to make the decision on how you want to structure this transaction. But those are 2 separate models that you can use as a baseline and then provide this video in these diagrams that we just drew out to your attorney so that they can help you with the entity formation. So in conclusion, to buy tax liens and tax deed certificates, due to the way that the banking systems work with these online auctions and live auctions, a lot of investors will form an LLC. And we showed you if you have one IRA, the IRA becomes the 100% member, and then that LLC is receiving the money from the IRA, and then that LLC is going out and buying tax lien and tax deed certificates. And then in this example that we just showed, you have multiple IRAs and investment accounts all partnered together in one LLC, and then that LLC goes out and purchases tax liens and tax deed certificates. I hope you enjoyed this training. I wish you the best of luck going forward as you are investing in tax lien and tax deed certificates. And certainly know that as you have questions about this, and as you have questions with your attorney, once you talk to an entity formation attorney, you can reach out to Equity Trust directly, and one of our associates can help you and your attorney walk through the procedures of how to do this with your self-directed IRA. Remember, we're not here to give legal advice. We're here to provide education and information and walk you through the procedures of how to do this with a self-directed IRA. Leverage us as just another member of your financial team, along with your attorney, possibly CPA, or other professionals. Again, I'm John Bowens here from the Equity Trust Virtual Classroom, and I wish you luck on your future tax lien and tax deed investments. And as always, keep leveraging compounding interest in the absence of taxation. Thank you.